Okay, this is our last panel for the day before we get to the exciting part of the startup winners. So, we're going to talk right now about evolutions in the real estate sector. We're talking technology, prop tech as they call it, a Silicon Valley perspective. And what better two speakers than David Brush, Chief Investment Officer at Merlin Properties, and Brendan Wallace, co-founder and managing partner of Fifth Wall Ventures. Please welcome David and Brendan.
Good afternoon. So last but certainly not least, I normally don't like to use the phrase uniquely qualified because having so many investment bankers pitch to me, 8 of whom said I'm uniquely qualified to do this one thing for you, I think the phrase has been somewhat cheapened over time. But I think today you'll find out that we're about to talk with someone who is uniquely qualified to talk about prop tech and the application of technology to the real estate space. So just a little bit of background on Brendan. Brendan's actually his interest and his experience in prop tech started at Stanford University as an MBA candidate where he was involved in co-founding Cabify, I think a company many of you will know a lot about. And during that time as well, was involved as an angel investor in over 60 companies. So started very early on in the interest in prop tech. Then went on to have a career in private equity real estate, Blackstone mainly. And then in 2016, co-founded Fifth Wall Venture Capital. Fifth Wall is currently the largest venture capital firm focused exclusively on the prop tech space. Prop tech, I think, more broadly defined, and I'm sure that Brendan will go into that, but only involved in technology that has applications to the property field. And today they have over $1 billion under management. Companies such as Open Door, Lime, which those of us in Madrid will know about, as well as Industrious, Hippo in the insurance space, and many other companies. So Brendan, the first thing I want to ask you is the time you're involved in private equity real estate, obviously a very lucrative business, the mid-2000s. That was a very, very good place to be. And you said, no, I'm going to toss all that aside and I'm going to set up a new company, a startup myself, focused on startup and prop tech. What was it about that moment in time that you thought, this is actually where I think the future is for me?
Yeah, so I had a unique experience at Blackstone because I kind of saw the bull market cycle when real estate was good and times were good, and then it flipped to a period where things were really bad. And I happened to be at business school at Stanford then. And what I saw was that a lot of real estate owners didn't really conceptualize themselves as operators. They were almost in the trading business. They were great at buying and selling real estate, and that was what the real estate industry was. But in a bear market, you might end up owning assets for much longer than you had contemplated. And so technology becomes this enabling force to drive efficiencies, to open new revenue opportunities. And unfortunately, as a real estate owner, it's really hard to identify all of these new emerging technologies. And so I thought there was this kind of unique white space where large real estate corporates were increasingly looking to technology they could adopt for their business. Startups, prop tech startups, wanted access to them, but there was no venture capital fund that was expressly focused on the real estate sector that was acting as that connective tissue between the two.
And that, I'd like you to go talk a little more about that because, full disclosure, we actually invested in the second of the Fifth Wall funds, and for the very reason that I think, I hope Brendan will elaborate on, because the uniqueness of your model, where your LPs are not sovereign wealth funds or not generalist LPs, your LPs tend to be strategic LPs who are in the property space.
Yeah.
And then in addition, you provide not just a platform to invest, but access to and advice to those LPs for how we're looking at which companies should we be going with, which technologies are the ones that might provide the best benefit for us. So talk a little bit about that and kind of why it was you went in that direction.
Yeah, so what I saw was that, prop tech was big, real estate corporates wanted access to this technology, and they weren't very well equipped to start their own venture capital firms internally to their business. And so there was this disconnect. And in starting a fund, the thesis to startups was, look, I'm going to be able to assemble the largest owners, operators, developers of real estate in the US and now globally, groups like Merlin, obviously. But when we looked at the corporates, what we saw was what they cared about was, of course, financial return, like any investor in a venture capital fund. But what they really cared about was the strategic value. So how the technologies we were looking at and investing in would actually unlock value for them. And a generalist venture capital fund that raises most of its capital from financial LPs doesn't really provide that intimate, high-touch relationship with its LPs. And so what we built was an advisory team that works really collaboratively with our corporates, showing them opportunities and themes that we're seeing in the innovation economy that can be very relevant for them. And so it's just a very unique model. Of the $1 billion we've raised, about $750 million comes from corporates. So literally corporates investing off their balance sheet.
Right.
And the balance of the capital is financial LPs, traditional investors in asset managers and venture capital funds.
Well, I'll just tell you from our experience, because we had just taken a decision as Merlin to really accelerate our view of how to apply technology to the real estate space. And we were struggling mightily, I can tell you, because the number of ideas and the number of new concepts out there, the number of startups that were pitching us all the time about this is the solution to your problem. We were so incapable of really filtering those through with any kind of prior experience. So it was a tall mountain for us to climb to try to understand which ideas and which companies had the best execution. So it's been extremely helpful for us to have Fifth Wall act as that filter, that source of information and knowledge for us. You scaled really, really quickly. So from 2016 to 3 years later, $1 billion under management, I'm sure you're bursting at the seams in your office space. You've just opened up and you've got a team now based in London. So talk to me about how were you able to scale so quickly, and then in that, why come to Europe now? What was it about internationalizing the business today that you saw now is the right time to do it?
So, in terms of scaling, I think 2016 I almost think of as like the genesis, the financial genesis of the prop tech industry. And what's happened is that you have this industry that the US is actually the largest industry, now rapidly adopting technology. So there's just been this secular growth of prop tech and real estate tech that's unprecedented. I mean, some of the largest companies now in private markets are real estate and prop tech companies. And that's really happened in the last 3 years. So I think Fifth Wall was fortunate to kind of be at the forefront of that and really capture that wave. The second thing is that what we saw is in working with these corporates, we build these kind of very dynamic, intimate, high-trust relationships with corporates that in understanding their pain points and how technology could impact their business, there was a lot of similarities and synergies, meaning the more corporates we worked with, the more pain points we looked at, the more opportunities we identified, the more we could actually encourage sharing and collaboration between those corporates. And the other advantage was the more corporates we worked with, the more distribution we could give the companies that we were investing in. So we really believed in this like consortium model, and that we really had like network effects in our LP model, which is pretty unique for a venture fund. And that's, I think, in part why we decided to come to Europe, was we were looking at, where should we expand into? And we now have 50 corporates, so owner-operator developers across retail, multifamily, hospitality, industrial, every major sector in the US. And we said, if you're an owner of real estate in Spain or in London or in Tokyo, the pain points and the opportunities that you're facing are a little bit different, but they're not altogether that different
fundamentally so.
Than what we're looking at in the US. And so could we take the insights we already have and apply them to international owners? And so in our second fund, we were fortunate to obviously have Merlin invest, along with British Land out of the UK, Segro out of the UK, and Jacina out of France. And what we've really seen is that bringing those European corporates and introducing them and driving interaction with our US corporates just creates this amazing synergy. And it's almost like we have intellectual economies of scale, because you've been to our conferences. There's just a lot of idea sharing and collaboration that I think is pretty foreign to the real estate industry. It doesn't usually characterize
It tends to be a fairly territorial space.
Yeah.
Goes with owning real estate, right? It's territorial.
Yeah, exactly.
I should also point out, we were talking Europe, because obviously we're here in Spain. But you've also gone to Asia as well, and you have large Asian corporates from Japan, China, also invested in this fund. So it's truly now a global platform. If you look at the technology now, and you started off in the U.S., so you're looking both at bringing some of the U.S. Technology providers to Europe, as well as looking at where to invest in the European companies as well. Where would you say that, how would you put the European space in its maturity as relative to the U.S.? And are you seeing more U.S. companies now, technology providers, coming to Europe, that they've achieved scale in the U.S., and now they're looking out? Talk a little bit about how you see those two markets and directionally which way the capital is flowing.
So maybe I'll kind of answer that question two ways, from the perspective of the corporates, the owners of real estate, and how they're thinking about technology, and then from the perspective of startups and the kind of emerging technology ecosystems, both North America, which everyone knows, but now Europe and Asia. So I think with respect to corporates, it feels like the corporates are kind of, in Europe, are where American real estate owner-operators were in 2016. The kind of existential questions of, should we be adopting technology? Should we have a point of view and a forward stance on technology? I think real estate corporates in the US said yes to that in 2016, and European owners weren't quite there in 2016. Today, I think you're really seeing it.
Yeah.
So there's been this increased recognition. Maybe it's kind of outside threats or seeing companies like WeWork, but there's just more awareness that you need to have a point of view on tech. So I'd say it's 2 to 3 years behind. With respect to the startups and the technology ecosystems, I think the US was still pretty immature in 2016.
Right.
There's not an enormous amount of capital flowing into prop tech, but it's 5x just in the last 3 years.
Right.
And Fifth Wall, despite the fact that we're the biggest prop tech fund, we actually represent a very small portion of the investment dollars into prop tech. It's about $13 billion last year. So one of the fascinating things is that Europe has built its own technology companies that work really well regionally. Because certain kinds of software travel well. Like, we have a company, VTS, that you're familiar with. It's leasing and asset management software. So the business of owning and operating a portfolio in the US, it's not that different than Spain or the UK or Japan. And so that software has been able to travel internationally quite well. However, when you look at like fintech, like financial service technology, because of regulation and capital markets, it's much harder for those technologies to travel, to actually make it to Europe. And so increasingly, we're looking at what are the precedents in the US, the great prop tech businesses that we think have driven great value for consumers and for corporates, and how can we identify or replicate technologies here in Europe? And that might be on a country-by-country basis, that might be somewhat regional. It's probably too early to say right now, but I think there's just a tremendous amount of opportunity in Europe.
And you said before, I've seen some of your information. If I'm not mistaken, there's been more capital raised for PropTech in the last 2 years than in all years previously. So this real explosion has been very, very recent. Is there a catalyst for that? I mean, sure, there's several, but why would you say real estate has historically been an analog business, and we laugh about it internally. We say, we've been the most resistant to technology. Finally, that's breaking down. Any reason why you think that's happening, or was started in 2016 and it's happening in Europe now? Was there a confluence of certain events that triggered it, or was it just the moment was right?
It's hard to say. I mean, real estate is one of the technology laggard industries. So it's one of the lowest spenders on IT of any major industry. So the real estate industry spends 0.4% of industry revenue on IT. By comparison, the average industry in the US spends about 3 to 4% on IT. So there's just a massive gap there.
Right.
So I think part of it was just there's
Catching
been
up.
this kind of leapfrog effect where in some ways all these iterations of technology had just bypassed the real estate industry.
Yeah.
And because of that, you didn't go through the step function change that happened in other industries. In other industries, you had enterprise software that was on-premise, and then next generation on-premise software, and then cloud-based software, and then mobile-enabled and data-enabled. Because real estate basically sat out about 2 decades worth of innovation, it basically went from nothing, or Excel spreadsheets or paper spreadsheets, to full-blown cloud-enabled, mobile-enabled enterprise software.
It's kind of like China. It went from the 19th century to the 21st century, just skipped the 20th century entirely.
Exactly. They just kind of skipped the line and really got to adopt really powerful technologies that had really high ROIs. I think another reason is also competitive threats, right? So I think Airbnb was this company that emerged, and the hotel industry initially was like, well, that's not really competitive
Right.
to us. The short-term rental economy thing is a fad, and turns out it's not.
Right.
And actually, it's directly competitive.
Right.
And so I think increasingly large owners are saying, what is my blockbuster moment when my Netflix comes along? Like, what am I going to do
Right.
when I have a disruptive threat come
Right.
along? And it's sometimes hard to conceptualize that
Right.
in the real estate industry because it's such a old business.
Right.
It's been done the same way for so long.
Right. Just an aside, I'll tell you, for us, I think WeWork was probably, from the standpoint of shaking the commercial real estate industry up and saying you need to do things differently. Forget about the business model, forget about all that, but just saying for corporate owners, someone could potentially come in and disintermediate you from your client was something that has really shaken a lot of people up. So we, as Merlin, have our own flexible co-working space. Jacine, I have one now, British Land Securities, Colonial. So a lot of the big incumbents have said, clearly there's a demand for this space that's been proven, and we can either sit there and let that market get taken away from us, or we're going to have to adapt and react to that. So an interesting space.
And I think one of the other things WeWork demonstrated to owners was that the business of selling space, which is the real estate industry, it needs to change.
Yeah.
Like WeWork, for all of its flaws that I think we've all learned about recently,
Right.
the one thing it did exceptionally well was it consumerized real estate in a
Right.
way that just hadn't happened before. You could sign a lease in 15 minutes.
Exactly.
You could move space very easily. They made it turnkey to move into offices. That just never characterized the real estate industry.
In fact, real estate's gone from an investing business to a service business. And a lot
Exactly.
of that was really kickstarted by WeWork. Tell me a little about, where, Fifth Wall specifically, where do you like to get involved in a startup? There's seed, there's angel, there's round A. What sort of companies are you particularly looking now from an investment perspective?
So our fund, our active fund right now is $500 million. So we're typically looking to write $5 to $25 million investments. And because our partners are these large corporates, we kind of don't invest in very, very early stage companies.
Right.
Obviously, we understand there's amazing opportunities in the angel space, but I think there's just too much risk to kind of put them in front of large corporates. So we look for like corporate adolescents. So like Series A, Series B,
Right.
Series C. There's some product market fit, there's some reference customers, there's some core team that's being built out,
Yep.
because those are the companies that with capital and with the network that we have, these distribution lanes that we can open up, we can really transform their business. So it tends to be in those stages that we'll invest.
And which verticals? Prop tech, it's one of those things where you ask 10 people what prop tech is, you're probably going to get 8 answers. You may not get 10, but you get 8. So when you look at prop tech, what are the verticals that you look at and you think are interesting today and that you are focused on investing in?
I mean, it's all so interesting, and there's just so much opportunity. But I'd say one space that we're particularly excited about is industrial real estate, which is actually real estate most people don't think about. Most people only notice that industrial real estate exists when you fly in and over an airport, and you're like, what are all those big buildings that are around the airport? I don't know what they are. That's where goods basically move. That's basically what drives e-commerce. And you can look at the logistics real estate industry as being that they have this massive industry secular tailwind of Amazon in the US. They've just propelled its growth. And it's put pressures on it that I think didn't exist before, where consumers are demanding delivery times that are very different than what they used to expect. They're expecting their goods in one day. And so that means industrial real estate no longer can just be located at the airport. It actually needs to be located at the edge of consumer centers. And it needs to be integrated with last mile logistics and a lot of services that used to take place in a retail context are now just being delivered to you. So almost the definition of industrial and logistics real estate is changing because of e-commerce. So I think there's a lot of opportunities there that we're really excited by.
Yeah. It's interesting you say that. One of the things that, from our perspective, this is how, again, how the changes intersect. And Tono was talking about in an earlier conference. We have an office building in Barcelona, 30,000 square meters, 350 parking spaces, and we've let 15 of them. We have 400 electric scooters and bicycles that are coming there. So now one of our challenges is to say, how do we use all of that parking space, which is in the center of Barcelona, no longer needed for automobiles because people aren't driving? How do you repurpose that for last mile logistics? Because you're immediately adjacent to those areas. So there's a lot of that, as you say, technology changes in last mile, I think, is really one of the critical things in logistics.
And parking is fascinating also.
Yeah.
Parking utilization is down all across the world. And in large part, that's because of ride sharing. And so I think you can look at ride sharing as like the canary in the coal mine of what's about to happen with vehicle ownership. Because I live in LA, you don't need to own a car in LA anymore. And imagine what happens when autonomous driving is more ubiquitous. You really don't need to own a car, and you definitely don't need parking spaces.
Yeah.
So the whole form factor of real estate is going to change because of these technology trends, and I think that's a really exciting opportunity for the tech industry and the real estate industry.
It's screaming that time's up to me now, so I think that's, we could probably fill up another half an hour, but unfortunately, we're getting the hook. So thank you very much for your attention. Appreciate it.